So good evening to you all. I thank God today the network is able to give us the opportunity to record it. So whatever the case will be, the meeting is being recorded. And so therefore we'll also post the recorded version on our portal for those who missed the meeting to go back and then have a face-to-face. In our earlier discussion, in our previous discussions, we've been looking at market structure. I don't know whose voice. I don't know whose voice. I think it will be from. Robert. It will be from Robert. I don't know how you are joining the link, but one of your sound is giving a feedback. So you have to check your sound system from there. Thank you. So just a recap of what we did last time. We said under market structure, what we are looking at is what form does the market takes? Or when we talk about the Forex market, what form does it take? And we say in the Forex market, there is a trending market, and then there is a ranging market. A trending market is either a market that is in an uptrend or a downtrend, where we look at an uptrend to be a buy market. Some call it a bullish market, and a downtrend to be a sell market or a bearish market. And we came to the realization that in a market like this particular section, from here all the way to here, this is a downtrend. This market is in a downtrend. You can see, and you can see that the candles tells for itself. And we learned about candlestick anatomy, where we said the red stands for a selling market and the green stand for a buying market, depending on whichever color you choose. You may see somebody using black for the sell and then blue for the buy, whichever one that you take. We went ahead and we said that even this trend, this line here from here to here, this is an uptrend, a buy market. So in this type of market, all you look for is to look for buys. This side is a downtrend. So in this type of market, all you look for is a sell. Then when we talk of a ranging market, from here to here, this is a ranging market or a consolidating market. So here we say the market is ranging or the market is consolidating or the market is choppy. So in a ranging market, why do we say it's a ranging market? Because there is an indecision between buyers and sellers. You don't know whether the market is going up or the market is going down. So in this type of market, we wait for what we call a breakout. There is an indecision between buyers and sellers. So you don't participate in the buys and the sells over here. You don't do that. Why? Because if you are participating in the buys and the sell, it will trap you. So another term for a consolidating market, they call it manipulation phase of the market. So when we are getting into deeper of the course, you understand all this one. It's like a trap. A ranging market is like a trap. They will trap you. You see, when you catch a market in a ranging market, it is sweet. There are traders that are good in trading a ranging market. It is sweet. When you are trading a ranging market, what you need to do is that whenever there's a breakout, you just exit the market. Simple as ABC. So these people have made a lot of money during the ranging time of the market. So when there's a breakout and they are losing money, they just lose more and then they are out of the market. They wait for the market to do its things, and when the market starts to range again, then they jump in again. That is how they do their trade. So in a ranging market, this is how the market goes like. So the market goes up, come down, goes up, come down, goes up, come down, goes up, come down. And you see, at this stage, you buy. At this stage, you buy. At this stage, you buy. At this stage, you sell. 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 All that you do, you make money. But you can see that you sell here, you exit here, you buy here, it goes back, you sell here, you buy here, you sell here, you buy here, you sell here, you buy here. You see, when you sell here, you exit, you buy here, you make money. It goes back here, you sell here, you exit, you make money. You go here, because you are making money, it's like you'll be like, Charlie, I'm on top of the market. Today, I'm killing the market. I'm murdering the market. I'm making money. So you now begin to feel that you are the boss on the market. Then you increase your lot size. You increase your risk appetite. Then you sell here. Then you make big money. Came here, you sell here again, make big money, then you come here. Because you have made that big money, you are anticipating another buy. From here to here, sell. That's how you begin to anticipate the market. Then you can see that you end up buying here, then the market continues to go down, 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 down. Now look, the moment the market goes down here, you'll be like, oh, it is coming up again, you know, close. It came back up, then it started going down, down. Just look from here that the market left you all the way to here, 432 pips. It's a huge money. It's a huge money. It means that all the money you have made here during this ranging time of the market, you will lose all that money, plus even part of your previous money. After you lost all the money finish, now see the market coming back up nicely again. So you see the market coming back up in the next moment or in the next few days like this, then you'll be like, the didn't quasi, all because you didn't take the right decision. That is basically what arranging markets is about. Now, today what I want us to look at is what we call support and resistance. I want us to look at support and resistance. Now, when we talk about a support, we are going to take this example. So let's say we have a rectangle like this. Then we have a baseball. Inside a rectangle like this. Or let me just do like this. So you have one baseball at the top here. You have one baseball at the down here. Now, when you hit the ball at the down here, this ball will jump up, go and hit the ceiling, and it comes down. So let's say the ball is here. Let's say this ball too is here. So if I hit this ball here like this, it goes up like that. Then it comes down. If I hit this ball here up like this, hit it up, it comes down, then it stops somewhere up like this. Now, why is it that for ball number 1, I hit it down, it hit the down, it went up, hit up, came down? Why is it that ball number 2, I hit it up, it hit up, it didn't go up again, but came down, it didn't go down again and went up? Because in the room at this side, the floor of the room is there. At this side, the ceiling of the room is there. So where the floor is what you call the support. So this side is supporting price to go up. This side is supporting price to go up. This side is resisting price from going up. This side is resisting price or is resisting the ball from going up. This side is resisting the ball from going down by supporting the price to go up. So the price ceiling is called resistance and the price floor is called support. what we always anticipate is that at every material point in time, so now I can delete these ones. At every material point in time, when price hits the floor, we anticipate price to go up until it hits the ceiling, it comes down, hit the floor, go up again, hit the ceiling, come down, hit the floor, hit the ceiling, hit the floor, hit the ceiling, hit the floor. This is how we always want to see price behave, all things being equal. Price to be hitting supports and be hitting resistance. The moment it hits support, it reverses. The moment price is going to the opposite direction, we say price is reversing. It hits resistance, it reverses. It hits support, it reverses. That is how we want to be seeing price. It is not always the case. There can be instances where price may hit here and then continue going down. There can be instances where price may hit here and continue going up. The moment price hits here and continued going down, we say there is a breakout. Meaning that this support here has been violated, or this support here has become weak. So it's just like you started using ball to be hitting a particular place, or you are hitting a particular place for a constant period of time. The place will definitely become weak. And the moment it becomes weak, it will break. If you are hitting here consistently, it becomes weak and it will break. So anytime a support is broken, we say there's a breakout. Anytime a resistance is broken, we say there is a breakout. Now, whenever there is a breakout, it also means that the supports, or let me start from it, the resistance is violated. So anytime there's a breakout at the resistance level, what it means is that this resistance becomes what? Violated. Whenever there is a breakout at the support level, it means this support becomes violated. What does it mean? The moment this support is broken, it's like a story building. When you fall from one floor, you go and land on another floor. That is how it is. When you fall from one floor or you jump through one floor, you go to another floor. So the moment there is a breakout here, then it means that this floor no longer holds. You are going to land on another floor. So until you land on a strong floor, you will continue going down. So let's say this is about, you are falling down from about some 5-story building. I want you to get the understanding. You are falling down from here. So first, second, third, you are on the 4th floor and you are falling down from the 4th floor. If the 3rd floor is not strong, you break through the third floor. If the second floor is not strong, you break through the second floor and come to the next floor. So you'll be breaking through the floors until you go and see a strong floor that will hold you not to go. But the ideal situation is that the moment you break from this floor, we are targeting the next floor to be where you be. So what it means now is that this place now becomes your new floor, and this place becomes your new what? Ceiling. This place becomes the new supports. And then this side becomes what? The resistance. So the previous supports becomes what? Resistance. So you will see people writing it like this. SBR. Supports becomes resistance. So the support now, so it means support becomes resistance. So the support has been violated, which is a breakout. This support now becomes what? A resistance. I don't want my chat to be cumbersome. If you don't understand anything, you can unmute yourself and then you talk. This support becomes what? A resistance. So now we have a new support. So we are assuming that now price will continue again to be playing around here, go up, come down, go up, come down, go up, come down, until it breaks this one too. So when price breaks this side, oh, what is it? Let me delete it. So when price breaks this side, we'll be anticipating the next floor. That price should come here and this floor should hold price. That is how we trade. Let's assume price also breaks here. You were able to jump and break this side. The next target for you is the next ceiling. So that side to price will be playing around here and go in that order, in that order, in that order, then it breaks again. So the moment it breaks again, you are looking for the next available resistance area for price to react over there. So if price breakouts, then it means that we are expecting price to come somewhere here. As our next target. So now, this your resistance now. So this is your new resistance. So price breaks here. So this becomes the new resistance. And then this side becomes what? The new support. So you see people calling it RBS. So when there's a situation like that, we have what you call RBS. That is resistance becomes support. So resistance now becoming support in this material moment over here, in this situation. So this side is no more the resistance, but it's now what? Support. So we are anticipating that when price go and hit the new resistance and price come here, we buy. Price goes here, you sell. Price come back again, we sell, we buy in that order. So you always buy at support and always sell at what? Resistance, just like the way I have indicated it here some time ago. Where is he? Where is he? Where is he? Where is he? Here. I told you. Okay, I think we were doing it at the other side. Okay, let's move on. That is basically what it means. Now let's go to the charts and see how best we can identify support level and we can identify what resistance level. So let me use Euro USD. Okay, let me clear all these ones over here. I think we are done with them. So you can see that at this material moment, price, oh, this thing I said I'm deleting. You can see that from here, when you want to draw support level, you pick the high and the low. Then you drag it all the way here. So now look at something. You have identified that price is ranging or price is consolidating. Even let me start from here so that I see something. No, this side is okay. Price is consolidating. It goes up, you sell, it comes down, you buy, it goes up, you sell, come down, you buy, it goes up, you sell, come down, you buy. Then as you bought over here, price break out and came somewhere here. Came back inside there. Let me use the line so that you understand what I'm saying. So from here, came down, went up, 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 came down, then started going down just like that. You have seen that price is consolidating within this particular range. Buy, you sell, you buy, you sell, you buy, you sell in that order. Then you bought here. Then price went up small, then it came down, went up aggressively, then it came down again. Now, at this moment, you can clearly see that in this area here, there is a breakout. In this area here. From here, I want to use this particular one so that you get what I'm saying. Here, there is a breakout. So the moment price started trading outside this particular box you have drawn, you no more look for buys, but you look for sell. The buys has been violated. The support now is becoming what? A resistance. And I said at resistance, what do? We sell. At support, what do? You buy. So if your support has been violated, at that support, you don't look for buys again, but you look for sell. So it means that anybody who will be buying within this range here, you are going to be in a heavy loss because the price will just move from you, and the way price will move from you, you will not even have the chance to even recover that particular loss. You just have to give the money to the market and go back. But if you understand this simple support and resistance, at that moment, taking a loss of $2 or $10 It's easy to take it than wait and come and take a loss of about $80 or $90. You will finish, then you'll be calling yourself, we did minimum can. Time I didn't year 5, I can my close you. It has done me before. And as a trader, you go through. It's a reality. You go through. But what will make you succeed is patience. Patience will make you succeed. And as I tell you from the beginning, in this market, you don't make money overnight. You don't enter this market and think you are going to buy the J-Wagon overnight. See, it can happen. People can do it. In fact, you can even do it. But the risk is very, very, very high. It's a high risk to over leverage and make that billion of money overnight. When you make that money, you'll be happy and you'll be tempted to do it again. That's the high risk of it. You'll be tempted to do it again. And when you are tempted to do it again, that is where the market will show you that this is the market. If you are the impatient type, this market can humble you when you become patient. So at this moment, I realized that my support has been violated. So the moment my support has been violated here, market came back again. When we are going further, I will explain why the market came back here and not somewhere here. The market came back there again, then start dropping nicely. Came back here again. I'll still explain why the market came back here. Then finally, the market has taken the move. It has given the sellers two clear-cut indications that we are ready for the sales. Buyers should get out of the way. Let's do our thing. And the sellers just took over the markets, took over the buy markets. And they ride this market all the way from here to here. That is 492 pips. This is a good amount of money. It's not small money. So they rode this market all the way from here to here. Then buyers also came in. And currently buyers are in control of the market. Where do I think the buyers are coming to? The buyers are coming all the way to this side. Buyers are coming all the way to this side before the sellers will take over again. That is basically where the market is going. So if you hold a buy from here, you get there,